Okay, get this. Something like 60% of the entire planet uses products from just one company every single day.
Wow, that's a staggering number.
It is, and that company is Meta. But after a pretty crazy few years, a lot of people are wondering, is it still a good investment? And hey, while we're at it, if you're liking what you hear today, hit that subscribe button so you don't miss any of our future deep dives.
Sounds good to me. So, for this deep dive, we're looking at a report that uses Warren Buffett's value investing principles to really break down Meta, which, as many of you probably know, used to be called Facebook.
Right, Facebook, Meta. I feel like they've had so many name changes, it's hard to keep up.
Mm-hmm.
But yeah, let's get into their business. Chapter 1 of this report really breaks it down. And, I think a lot of people might not realize just how much bigger Meta is than just Facebook these days.
That's true. I mean, we're talking a whole family of apps under the Meta umbrella. Think Instagram, Messenger, WhatsApp. They're not just in the social media space, they practically dominate it.
Billions of users, right?
Billions with a B. We're talking Facebook alone has over 2 billion daily active users, and Instagram has almost 4 billion using it every month. That kind of reach is just mind-blowing.
Seriously, that's massive. But it also makes me wonder, how could anyone even try to compete with that? I mean, does Meta even have any real weaknesses?
Well, it's true. The barrier to entry in social media is enormous. A new company would need to not only attract billions of users, but also build up that global infrastructure. It's a huge task. But even with all that, Meta isn't totally untouchable.
So where do we even start with understanding how Meta stacks up against other companies? What are some of the key numbers we should be paying attention to?
Market cap is always a good place to begin. Meta's is currently sitting at a massive $1.55 trillion. To put that in perspective, that's bigger than companies like Equinix, which comes in at $85.53 billion, SEA Limited at $25.95 billion, even eBay at $8.88 billion.
Wow, that really puts it into perspective. But market cap isn't the whole story, right? What other metrics should we be considering?
You got it. Dividend yield and the price-to-earnings ratio, also known as the PE ratio, are both super important for getting a handle on a company's financial health. Meta's dividend yield is at 0.33%, and their PE ratio is at 29.01. These numbers can really help investors compare Meta's value to other companies out there.
And you know what else is interesting to me? The legal stuff.
Yeah.
The whole regulatory environment for a company like Meta is always changing. What are some of the legal challenges they're facing right now?
You're hitting on a key point. The legal landscape is definitely shifting, especially with new laws like COPA 2, 2.0, and COSA. Both of those are specifically aimed at protecting kids online.
I've heard of those, but remind me, what do those laws actually do?
So, COPA 2.0 would basically prevent companies from collecting personal data from kids under 13 without getting their parents' consent. And COSA, that one aims to ban targeted advertising that's directed at children and teenagers.
Oh, right. Now I remember. So how could these new laws actually change the way Meta operates?
That's the million-dollar question. Meta might have to completely rethink how they collect and use data, especially when it comes to younger users. And since advertising is such a huge part of their business, that could really impact their bottom line.
It's crazy to think how much those laws could shake things up. But speaking of shaking things up, let's move on to Chapter 2, which focuses on Mark Zuckerberg and all the big financial decisions Meta has made. It's kind of wild to think that the guy has been running this company since he was just 19 years old.
Seriously, it's an incredible story of entrepreneurial success. I mean, he's been leading Meta for their entire journey, guiding their growth and strategy from the very beginning. He's basically the face of the company.
Totally. And the report dives into this meta leadership approach that Meta seems to use. What exactly is that? It sounds kind of philosophical.
Yeah, it's an interesting concept. Basically, meta leadership prioritizes things like self-awareness, being able to understand different perspectives, and building strong connections. The idea is to get leaders thinking about the big picture and considering the needs of all stakeholders, not just shareholders.
So it's like a more holistic approach to leadership, right? But does it actually work in the real world, or is it just a bunch of buzzwords?
Well, it's certainly helped Meta navigate some very public crises over the years, but there are definitely critics who say it's more about looking good than actual accountability.
That's a fair point. Speaking of navigating the business world, let's talk about some of Meta's big acquisitions, like buying Instagram for $1 billion, and then they went and got WhatsApp for a whopping $19 billion. Were those smart moves in the long run?
Those acquisitions have definitely been crucial to Meta's current dominance. Instagram, for example, helped them appeal to younger audiences and focus more on visual content. And WhatsApp really expanded their reach in the messaging app market. But some analysts say that they might have overpaid for WhatsApp.
Yeah, $19 billion is a lot of money. I guess only time will tell on that one. Let's talk about their dividend policy. They recently announced a dividend of 50 cents a share. What does that signal to potential investors?
Well, it could be a sign that Meta is shifting gears when it comes to how they use their capital. It could mean they're confident about their future cash flow and want to give back to shareholders.
Yeah, that makes sense. Okay, time for a deep dive into the nitty-gritty of Meta's financials. Chapter 3 is all about that. What's the big picture? Are they doing well?
Overall, Meta's financials look really strong. They brought in a whopping $134.9 billion in revenue in 2023, and their net income was $39.1 billion. And get this, their gross margin was 81.5%.
Hold on, did you say 81.5%?
That's right, 81.5%. It's impressive, to say the least.
Wow, that's amazing. So what about their free cash flow? The report makes it sound like they're practically swimming in cash.
Well, they are sitting on a sizable pile of cash. And free cash flow is a key metric because it tells you how much cash they have left over after covering their operating expenses and capital expenditures. That gives them the flexibility to invest in new projects, buy back stock, or, like we've seen, pay dividends.
Right, so it's all about having options. So has Meta been a steady grower over the years? Have they been consistently bringing in more money?
They have. Their revenue and earnings have both been steadily increasing over the past decade. In fact, their average annual revenue growth rate is an impressive 30%.
Wow, that's a lot to take in. Feeling inspired by all this talk about stocks. We want to hear from you. Head over to our YouTube channel, Stock Analytics, and let us know which stocks you'd like us to do a deep dive on.
Now let's try and get inside the market's head and see what they're thinking about Meta. That's chapter 4 in our report.
Ooh, I like that. Reading the market's mind. So what's the market whispering about Meta these days?
Well, one thing that really sticks out is that we've seen some insider selling of Meta stock.
Wait, really? Insiders are selling. Isn't that usually a bad sign? Like, they don't have faith in the company's future.
Not necessarily. It's not always a red flag. People sell stock for all kinds of reasons. Sometimes they just need cash for personal stuff, or maybe they're just trying to spread out their investments a bit, diversify their portfolio.
Okay, that makes sense. So how should we interpret this insider selling when it comes to Meta? Should we be worried?
It's definitely something to keep an eye on, but it's not the only thing to consider. We need to look at the bigger picture.
All right, so what else should we be looking at? What other pieces of the puzzle are there?
Well, there have been a few interesting news stories lately that might give us some clues. For example, Meta decided to drop those third-party fact-checkers they were using. And then they also ended their DEI programs. Oh, and they've been putting a lot of money into clean energy initiatives.
Whoa, hold on. There's a lot to unpack there. Let's take it one at a time. First, the fact checkers. Why would they drop them?
Well, Zuckerberg's been talking a lot about prioritizing free speech, but some critics are saying that it's really just a way for Meta to avoid being held accountable for all the misinformation that spreads on their platforms.
Yeah, that makes sense. Okay, what about ending the DEI programs? Didn't Meta used to be really focused on diversity and inclusion?
They did, but Meta is not the only company scaling back on DEI these days. It's becoming a bit of a trend. Some people say it's because of political pressure. Others think it's just a sign of the times. The business world's priorities are shifting.
It's hard to know for sure what's driving those decisions. Okay, so what about the clean energy stuff? That seems like a good thing, right?
Yeah, most people see it as a positive move, both for the environment and for the company's sustainability in the long run.
All right, so lots of internal changes happening at Meta, but what about external factors? What about this whole thing with TikTok? The Supreme Court's considering banning it here in the U.S., right? Could that be a game changer for Meta?
It could be huge. If TikTok gets banned, there's a good chance that a lot of those users and advertisers will jump ship and head over to Meta's platforms. But, we don't know for sure what the Supreme Court will decide, so it's still up in the air.
True. It's all speculation at this point. So lots going on in the world that could impact Meta's future. Speaking of which, let's move on to Chapter 5 and see who actually owns this massive company.
It's an interesting mix, that's for sure. The majority of Meta is owned by institutional investors, like big investment firms. We're talking roughly 64.32%.
So regular people like me don't own much of Meta.
Well, insider ownership, meaning the company's own executives, is actually pretty low, only around 0.72%. Zuckerberg himself owns about 13.6% of the company, though.
So the big institutions are really the ones calling the shots. Have there been any big changes in ownership lately? Like any big investors buying in or selling out?
There have been a few interesting moves. Zuckerberg's ownership actually went down by 4.82% in the past year. But on the other hand, Vanguard Group, which is the biggest institutional shareholder, they increased their stake by 3.12%. And BlackRock upped theirs by 3.99%.
Interesting. Sounds like some investors are getting more bullish on Meta while others are pulling back.
Yeah.
That makes me wonder about their strengths and weaknesses overall. Like, are they fundamentally a strong company?
That brings us to Chapter 6, which is all about the SWOT analysis. That's where we really get into Meta's strengths, weaknesses, opportunities, and threats. Like a report card for the company.
I like that, a report card. Okay, so let's start with the good stuff. What are Meta's biggest strengths?
Well, I'd say their biggest advantage is that massive user base we talked about earlier. That creates these incredible network effects, which makes it almost impossible for competitors to catch up. And they're also constantly innovating, coming up with new features and technologies all the time.
Okay, but they've got to have some weaknesses too, right?
Sure.
Nobody's perfect.
Of course. One big weakness is how much they rely on advertising revenue. If the advertising market takes a hit, Meta's bottom line could really suffer. And then there's the fact that Facebook's user base is getting older and younger people are gravitating towards platforms like TikTok and YouTube.
Yeah, it seems like they have their work cut out for them to stay on top. But what about opportunities? Where can Meta go from here? What are their biggest growth opportunities?
Well, there's still a lot of room for them to grow, especially in developing countries where they don't have as much of a presence yet. And like we talked about earlier, they're investing heavily in new technologies like virtual reality and artificial intelligence.
Ah, yes, the metaverse. Zuckerberg's big bet on the future. But what about threats? They must have some serious competition out there.
Definitely. Platforms like TikTok, X, and YouTube are all vying for users and advertising dollars. And of course, there's the constant battle against cybercrime and misinformation on their platforms. That's a never-ending challenge.
Plus, there's that whole regulatory landscape we talked about earlier. With those new laws being considered, that's a big threat for a company like Meta, right?
Absolutely. Staying ahead of new laws and regulations is crucial, especially for a tech giant like Meta. They have to be on their toes all the time.
Okay, so we've covered a ton of ground here. But let's get down to brass tacks, the bottom line. Chapter 7, what is Meta actually worth?
That's the million-dollar question. And honestly, valuing tech companies is tricky business. There's no perfect formula. But we do have some estimates to work with. GuruFocus says their intrinsic value is $228.67 per share. But then AlphaSpread puts it much higher, at $409.30 per share.
Wow, that's a pretty big difference. So what's the verdict? Is Meta overvalued right now, or are they a bargain?
It's tough to say for sure. There are just so many factors at play. We have to consider their growth potential, their ability to overcome all these challenges. It's complicated.
Sounds like there's a lot more to think about here.
There is. Investing is all about managing risk and making informed decisions. And sometimes the most interesting answers are the ones that require us to dig a little deeper and do more research.
And we're back for the final part of our deep dive into Meta. It's been quite a journey, hasn't it?
It really has. We've covered a lot of ground, from their business model and leadership style to their financials, the market's perception, who owns the company, and even their strengths and weaknesses.
Feels like we should get an honorary degree in meta-analysis or something, but after all of that, the big question remains, is Meta still a good investment?
Well, that's the million-dollar question, isn't it? And as we've seen, there's no easy answer. Meta has some serious advantages, like that huge user base we talked about, their commitment to innovation, and their strong financial performance. But they've also got some challenges ahead, like competition from other platforms, all the regulatory scrutiny they face, and the fact that the tech landscape is constantly changing.
So how do investors even begin to make sense of all of that? It seems like a lot to weigh.
The most important thing is to always do your own research. Don't just rely on headlines or what you see on social media. Dig into the company's financial statements, read what industry experts are saying, and really consider all sides of the story.
I think that's such an important point. It's so easy to get caught up in the hype or the fear, especially when it comes to tech stocks.
Exactly. Investing is about making informed decisions, not blindly following the crowd. You need solid research and a clear understanding of your own risk tolerance.
So as we wrap up this deep dive into Meta, what's the one big takeaway you want our listeners to remember?
I think the key takeaway is that Meta is at a crossroads. They have the potential to continue dominating social media and maybe even become a major player in the metaverse. But they're also facing some significant hurdles that could really impact their future. The next few years will be crucial for Meta, and it'll be interesting to see how they navigate the challenges and opportunities that come their way.
That's a really great point. We've explored their past, their present, but as you said, their future is still being written. I think it's a good reminder that investing is a dynamic world, always changing and evolving. And honestly, that's what makes it so exciting.
Couldn't agree more. That's why it's so important to stay informed, do your due diligence, and never stop learning.
Well said. Thanks for joining us on this deep dive into Meta. If you enjoyed today's episode, make sure you hit that subscribe button so you don't miss any of our future deep dives into the companies and trends shaping our world. And as always, before making any investment decisions, make sure you talk to a financial advisor and do your own thorough research. Until next time, happy investing.